following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got almost 20 minutes to go until the opening bell, and you have markets down to the negative side. You get the Dow positive. We got some action in some equities with their earnings. Salesforce putting a little bit in the Dow, I believe, as in Salesforce, man. You're talking about a move almost 20%. Dow up 87 points, S&P negative by 22 points right now. We have yield spiking. You get the 10-year above 4%. Where are we sitting right now? Yields is going to be the conversation today, man. So much for 4%. Let's start it off with the 10-year. That's a move for you. That's a 1-minute chart, folks. Let's put it on a 5-minute just to show things a little bit more. You talk about the move from yesterday to overnight. We were just sitting at 110.30 at about 7 in the morning, just like that. We're at 110.16 right now. 10-year yield, 4.07%. What happened to 4%? 4.07%, the yield in the 10-year right now. The article I was going to kick things off with, 2-year Treasury yield reaches highs not seen in more than a decade as well. Yield spiking, man. 10-year Treasury up by 2.6 basis points to 4.022%. Trading above the 4% mark at levels last seen in early November. That's the 10-year. The 2-year, 4.887. Early in the session, 4.937. Last seen mid-2006. Mid-2006. It is wild what's going on with rates, man. We jump to currencies. We're going to go almost backwards. Usually we go down the indices, right? And then we go to commodities. And then we usually go to yields. And then we go to currencies. Well, we've been to yields. Now we're going to go to currencies, okay? Because you better believe it, man. We almost got a 103 handle yesterday, folks, and we're above 105. That is a reversal. You take a look at the dollar. We're going to put things back on a daily basis. We were talking to our man Teddy Kegstadt yesterday, folks. He was talking about potentially finishing higher. He was talking about some candlesticks, and boy, we got quite another candle coming up right now. That's today's candle for you. And boy, you could just engulf everything that's going on here to the upside. Kind of what Teddy was talking about, I believe. You can check out all the interviews we do, folks, right on our YouTube channel. Just search for TFNN. But boy, there are moves everywhere in this market. A little dicey on the idea of higher yield coming at you, especially at the speed that it's coming at you with. We jump to commodities. Crude. Back to a 15-minute chart. 78.05 for crude. Gold contract. Facing a stronger dollar this morning. We're getting a weaker gold contract at $18.39, down about $6. We jump to, let's see how the euro's trading. Yeah, there's a pullback for you. We almost had a 107 handle, and just like that, we're in a 105 handle in the euro. We jump to the dollar yen. Dollar yen right now trading at 137. Let's take a look at that on a daily basis. Quite the reversal of the trends. Now, boy, you talk about a move in the dollar yen. Let's just talk some Fibonacci's for a moment, right? Right at the 382. Critical area for the yen. We're blowing past that area right now, though, as you're up 72 ticks right now, or 72 basis points at 136.92. And let's jump over to the VIX. We got negative action yet again. VIX still relatively low, sitting at 21 right now. We're less than 3 weeks away from a Federal Reserve announcement, March 22nd. That's 3 weeks from yesterday. Correct, yeah, in my own head. 3 weeks from yesterday, we get a Federal Reserve. We still have some earnings. And, boy, let's jump over to those Salesforce numbers. Now, the chart's not showing that this thing's going to open at basically 194. Okay, so you're talking about from 124 to 194 in the span of the beginning of this year so far. Salesforce, you're just back to where you were in August, and it's still quite a far cry from the highs that we saw in 2021 of 311. I believe back in maybe that's where, the beginning of 2021, that they talked about buying slack. So you trade from 240 to 220. But, boy, you talk about some big numbers, man. Let's take a look at these Salesforce numbers, because you're talking about margins. You're talking about profits at a time when many companies are seeing margins a real problem. Salesforce stock surges as software maker sees its profitability rising, and you talk about a rise, man. Check this out. Here we go. For the fiscal year that started February 1st, Salesforce is projecting adjusted operating margins of about 27% up from 22.5 in the recently completed year. Last year, Salesforce execs laid out to analysts a plan that would boost its adjusted operating margins to 25% by 2026. They just came in at 27%. Before 2022, the company's margin was perennially less than 20%. It's a mammoth number. And then what do you add on top of that? You add on top of that revenue grew 14% to $8.38 billion in the 3 months through January. They had a loss, widened to $98 million, struggling with the sales slowdown. Its revenue growth has averaged 25% for years, but has been slowing. So revenue, better than expected, 14%. We already knew they had a revenue problem. That's part of the drop-off. But, boy, you talk about some earnings, man. They're going to be jacking things up. Pretty remarkable. A company can run to that degree on those types of margins. But when you're in the cloud, boy, every extra dollar you get when you already have the infrastructure set up, right? Billings, a measure that reflected business transacted during the quarter and serves as a leading indicator of revenue. So they got billings versus revenue, okay, rising 13% to $14.68 billion. The market was only looking for 13.74. So those are billings that have not yet shown up in revenue. That's $1 billion, man, more than the market was looking for. Just mammoth numbers for Salesforce here. Yeah. And they're going to open dramatically higher this morning, man. So there's the long-term chart, and you want to see some action? There is some action on their numbers last night. The expected move for Salesforce, about $10. The move you're actually going to get, almost $30 to the upside at $195. Stay tuned, folks. We'll be back with Kevin Hincks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P down 22 points right now. NASDAQ 100, you're off about 1%, 11,844. We have the 10-year yield at about 4.07%. You got the Dow up 91 points, but that's because you got Salesforce, one of the higher price equities in the Dow, up about 16% right now, putting a bid in the Dow. To talk about it all, the action today, let's jump over to our man Kevin Hincks, folks. Every trading day, 12 noon Eastern time, right here on Tiger TV. We're very, very fortunate to have the TD Ameritrade Network, the program Fast Market, Kevin Hincks, Tom White. They break down the action, folks. They're talking options. They're talking about defined risk in a market. Man, we're getting some swings. Kevin Hincks, what do you think about the yield action going on this morning? Happy Thursday, man.
Good morning, Tommy O'Brien. Yeah, it all started with Eurozone inflation that came out higher than expected overnight. That put pressure on our bonds and notes. So, yeah, people should start getting used to higher yields for longer. You know, you've got Christine Lagarde, you've got our Fed members kind of managing expectations when it comes to rates and yields and where they're going, and they're all talking higher, Tommy, because let's face it, the inflation number, the year-over-year in the Eurozone, both went up. So the year-over-year numbers. So this is an economy still struggling with inflation, and it's going to show up in yields. Now, today, the dollar's higher. Now, the dollar had been lower the last few days, but today, not only a yield higher, but the dollar's higher. You've got Tesla lower to start the day. If you're looking at the Dow futures, why they're strong, you just mentioned it. It's all Salesforce. So, you know, I think it's an interesting look at these two companies, one thinking very short term, one thinking very long term in Tesla. So interesting start to the day for sure, Tommy.
Pretty wild how yields just keep taking center stage. Salesforce, man, crazy margins they're talking about, 25, 27%. Must be nice running a company, taking in $8 billion, man, and you're taking, 25, 27% to the bottom line as they're growing revenue at 14%. They had been growing revenue at 25%, something like that. But, boy, this stock has paid the price down from 300 and change or so forth. It's pretty interesting, Kevin. How about this? I'm just going to jump to the Dow for a second, right? Because, you watch the nightly news or something like that. They might quote the S&P. They might quote the Dow, and we all know it. But, Kevin, I always joke with my dad sometimes, I say, if you gave me an assignment to create an index and I gave you a price-weighted index, and I was just pulling up the weightings, and, we all kind of know them, but it's interesting that you got United Health in the Dow that's $475 or something like that. You have Intel in there that's $25. You have Salesforce, about the 13th price stock in terms of the impact it can have for a price-weighted index at about $195 this morning. How does that happen, Kevin? And I know it, but what's your take? Because I'm always, it's very difficult for me to explain to somebody outside of the market that everybody quotes the Dow Jones Industrial Average. It's a great index, man, for sure. But something that's price weighted versus market cap weighted, how does that even come about? Or we'll digress a bit. But what do you think about the Dow and how that's get quoted and that type of comparison when you see on a day like today, right? If you're not in the market, if a local news just said Dow finished up 71 points for the day, talk about missing the story just because of one stock on a price-weighted index.
Well, you just identified a key problem, a true identifier of what the overall market's doing. I don't know how people get to metrics or why they put price weights or different weights on things, but I want a clear, if I'm looking at the markets, and you're right, the Dow is the headline on the news every night, and that's a problem because it shouldn't be, right? If your viewers are out there, they should be looking at the S&P 500. That's the true benchmark, that covers all the different sectors. I mean, if you look at, let's say, the NASDAQ doesn't even have some of the sectors that the S&P has. The Dow is 30 stocks. How can you? It's just outdated because there's so many companies now. So I think I'll make this discussion real simple. All your viewers should be watching the S&P 500, not the Dow. They should be watching the NASDAQ if their portfolios are heavily into tech, and if they're all small domestic U.S. companies, it's the Russell 2000. But the Dow Industrial Average is an outdated average that only shows a very thin wedge of the U.S. economy, Tommy.
I just wanted to make sure I wasn't taking crazy pills, Kevin. I appreciate it, man. I joke that, if I was in class or if I had students, I just, and I said create an index, I'd probably fail them if they said, well, we're going to pick 30 stocks. One's going to be $500. One's going to be $20. And the price of those equities is going to determine the index. And in the same class, you're probably learning about, folks, that the price of a share of a company is actually meaningless because you got to multiply it by the amount of shares. We digress a bit, man, but on this morning, I think about it and it's always talked about. With that in mind, Kevin, man, we got some other companies moving this morning. We're still kind of wrapping up some earnings. What are you guys talking about on Fast Market at 12 today?
Still in earnings season, Tommy, and working through our names today. We'll look at three good things. More structure. Portfolio will do the. Let's go. And then we'll look at Broadcom, also coming out with earnings. So companies all with earnings after the bell today, Tommy.
Can you say those first two again for me, Kevin? You broke up a little bit. We heard Broadcom in the first two.
Zscaler in the A block, then
nice.
Costco with Portfolio, and
nice.
then Broadcom in our final segment.
Fantastic, man. I appreciate the time as always, Kevin, and it's always interesting, man. We talk to you Tuesday, Wednesday, and Thursday, and boy, these markets, they move from Thursday to Tuesday like it's nothing, man. Have a great show, Kevin. Have a great weekend. We look forward to the program at 12, and we'll talk to you next Tuesday, man.
Have a great weekend, Tommy.
You too. Folks, tune in every trading day. I've learned a tremendous amount myself from watching Kevin, the team at TD Ameritrade Network. They break down the day's action. They walk you through 3 hypothetical trade setups. And it's the best way to watch, man. They're walking you through trades. They're talking about trade management. If you want to understand options, okay, if you want to understand more complex options, multi-leg options, talking about defined risk. And boy, you can't beat defined risk, folks, in this market because there's some tail risks going on in this market right now. My perception to the downside to some degree. But you're seeing the rates. You're seeing them catch up. And it seems like, at best, we were a bit naive to think that we would have generational inflation soar. We would call it transitory. It would become non-transitory. And then we would anticipate cuts by the end of this year. Folks, we haven't seen this happen 30, 40 years. Who knows how sticky this is going to be, man? When I get back, and I'll tease it, I'll pull up this article. Let me see if I can find it. And it's a great answer from Kevin, and they're not profound things to think about, folks. But it is interesting to think about that context and how the Dow gets so much attention, and it almost speaks to the financial illiteracy of our country, man. It's a bummer that the Dow gets professed. And meanwhile, I mean, there are people, there are educated, well-to-do people running those news organizations. There's no reason why they can't quote the S&P 500, man, because these are the weightings from the Dow, folks. It's a price-weighted index, and it's amazing. You got UNH up there at 480, Goldman Sachs, Home Depot, right? McDonald's, Caterpillar, Microsoft, Amgen, Visa, Boeing, all above 200. Salesforce jumping $27 today. Guess what? $27 that Salesforce is up today, more than Intel trades at. Wild. And what time are we at? I think we got the opening bell coming up. We sure do. Okay, we got S&Ps almost near session lows at 39.34. We have yield spiking. We have strength in the dollar. All of it going to weigh on markets this morning. Stay tuned, folks. We'll be coming back to the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, welcome back, folks. We got markets open. You got an S&P down about 21 points, trading at 39.35, pretty much right where we were at about 8:30 p.m. Eastern time last night. As I mentioned, Dow up 61 points. Let's see how some of the equities are moving this morning on their numbers. Salesforce up 15.4%, quite a move for Salesforce. Macy's out with their numbers. They're up about 5.7%. Best Buy out with their numbers down about 1.7%. All right, we're going to talk a little bit of inflation. Why not, man? Almost in jest, as in, of course, we got to talk inflation. Interesting story from the Journal out here. The story is talking about the Fed might be winning inflation fight depending on the index used. Well, this article is not going to be friendly to Chairman Powell because if you're using the PCE, which is the Fed's preferred inflation gauge, which is the number we got last Friday, you could see some pressure being put to the upside on that expenditure index in the next year. Excuse me, folks. Okay. The CPI and PCE indicators could send divergent messages. Well, if you're following the Fed, pay attention to the PCE. Okay? That's going to be the common theme that I'm going to stress, depending on where you are in this, because it's all about the Fed, man. Who cares what else is going on if you're following interest rate policy? Yes, of course it matters to you, me, everybody, mom and pop, when inflation numbers are rising on a CPI basis. But if that's not going to impact the rate policy, the Fed is not going to have the impact on the market that you may be looking for, okay? Now, markets are now betting that inflation, as measured by the 12-month change in CPI, okay, will fall to about 2.8% by October from 6.4% in January. God bless us all if that's happening, man. 2.8% in October. Get the champagne out a couple months early towards the end of the year, man. Not sure that's going to happen, okay, but that's what markets are looking for. Normally, CPI inflation runs a bit higher than inflation measured by the PCE. So, to recap again, because I think these numbers are wildly off, man, and this presents a risk to hotter inflation than you're thinking. It's already happening, okay? And when you start thinking about it, you said, why would we think that inflation popped up for the first time in 30 or 40 years? We had 0% investment capital for like 10 to 15 years, okay, allowing all of this debt and growth companies and all of this stuff to take off into the economy. We have stimulus, of course, because of COVID. It's It's kind of like arrogant and naive to think that we've never faced something like this before, and we're dealing with numbers of 6.4% in January, and we're getting told by the market that we'll be back to 2.8% in October. Now, we're going to have some lofty comps coming into the end of the year in terms of the numbers that we're comping with towards the end of the year versus the numbers we're comping with now, okay? That there's going to have to still be some decent price action to the upside to show big numbers versus the October comps that we're dealing with in terms of the prices that we already had late last year. Normally, CPI runs a bit higher than the PCE. So they're saying if that pretty much holds and the CPI is at 2.8, that would put historically the PCE a bit below that at about 2.5. Okay, and that would basically imply that the Fed's done with their work. We're at 2.5. We're probably on the way to 2. We're done. Now, things differ, though. We've talked about this before. And just so we state things, okay, the projections for these numbers are pretty lofty to the downside, okay? The differences in how the two indexes are constructed mean the historical wedge might shrink or even invert as CPI comes down much faster than PCE inflation. Well, PCE is the one that matters to the Fed. PCE is the one that we just got last Friday that was super hot compared to what we thought. Barclays forecast that PCE will rise about 2.8% in October from a year earlier, while CPI's 12-month growth rate will slip to 2.6. So they see PCI actually 0.2 above where it is for CPI. That will leave market participants looking at low inflation, while the Fed looks at a measure that tells them that they need to continue to be quite hawkish. The Fed will have quite a quandary on its hands from a communications standpoint. I don't think they will. I don't. We'll see how the market reacts. We'll see how the economy is functioning at that point, okay? But the gap has been even wider than usual. The CPI inflation has been 1.7 percentage points higher than the PCE index last year. In January, that gap narrowed to 1%. So it's come down from 1.7 to 1, okay? And they think it's probably going to invert as you get into the end of this year, and that the PCE is going to be higher. Now, one reason, probably the only reason, is the different weights of housing. No, excuse me. It's not the only reason. Okay, one reason is housing. I was going to say one reason is how things are weighted in there, okay? The CPI, I've talked about this before, but it's so important right now. It's going on in the market. Consumer price index is everything you are actually paying for out of pocket. Those are the consumer prices. So you are aware of those prices. They're consumer prices that you pay, okay? The cost of housing are rising about 8% a year in both indexes, okay? But housing makes up about 1/3 of the CPI, more than twice its share in the PCE. That means the strength in housing costs is pushing up CPI more, okay, contributing 2.5 percentage points in January, compared with 1.2 in the PCE. But that's going to reverse. Okay, CPI shelter inflation to fall from 8.1% in March to 5.5% by December, and such a reversal will likely exert a bigger drag on the CPI than the PCE. So as housing is going to roll over, housing is 33% of the CPI. It's less than half of that for the PCE. Okay, now PCE is everything that you consume. Personal consumption expenditure. So you have consumer price index, which is the prices that you're aware of as a consumer, versus the personal consumption expenditure, which is everything you're consuming. Well, one of the things that many people consume that they do not directly pay for is healthcare, because they have employee-funded healthcare plans. So what is happening is that's a consumption that they are consuming, that healthcare, okay? Meanwhile, somebody else is paying for it. Well, that shows up in the PCE. Medical care costs. Unlike housing, medical care services inflation is expected to accelerate. 16% of the PCE as opposed to just 7% in the CPI. So what are you going to have? You're going to have medical cares rising, putting heat into the PCE. What are you going to have? You're going to have housing prices potentially pulling back with shelter pulling back. That's not going to have as big of an impact on the PCE as it is on the CPI. it's amazing how this is going to play out. The CPI's measurement technique for health insurance means it will be a deflationary drag on overall inflation through September or October. Excluding health insurance, the CPI's index of medical care services rose 3.2% in January from a year earlier. Healthcare and the PCE index, which doesn't include insurance, increased 2.1%. PCE is going to be hot, man. And even if they're thinking these numbers, and how about these numbers, right? I mean, that's a rosy scenario of 2.8% by October, folks, okay? And the Fed cares about the PCE. You're seeing rates rise, and yeah, we get the 10-year right now sitting, what are we sitting, probably 4.05%? Let's pull it up. Nope, 4.07%. The yield on the 10-year right now, and as we go to break, let's take a look at that yield curve, man, because we got the 2-year. 2-year, 4.93%. How about that? 10-year, 4.07. Stay tuned, folks. We'll be right back after the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets pretty much right where we kick things off. S&P right now down about 20 points. NASDAQ down by 87. The Dow up by 23. Salesforce gives up some of that gain, I should say, up still 13.5%. Quite a number for Salesforce. Best Buy, they charge back, man. They're actually in the green now. After being down at $80, you're at about $83. Barely in the green for Best Buy. Macy's shares in the positive by 9.99% right now for Macy's shares. Jumping over to Best Buy. So it's interesting. Revenue topped the expectations. Waning demand for consumer electronics proved better than feared. Consumer electronics retailer revenue $43.8 billion to $45.2 for the coming fiscal year, a decline from its most recent. And same-store sales declined between 3 and 6%. Earnings beat, revenue barely a beat as well. And yeah, they're going to hold up a little bit better than the market thought. Same-store sales decreased by 9.3% during the fourth quarter. Same-store sales down 9.9%. I mean, they had to pull forward a lot of people putting a lot of electronics in their house. I know myself included. I had some laptops. We had some TVs. I spent more time in the house, man. It's been, 3 years that this has been going on. But nonetheless, they hold up somewhat well. And we jump over to Macy's. Shares jump after holiday quarter profit tops expectations for Macy's. So they expect net sales to decline 1 to 3% in the fiscal year. That's going to be about $23.7 to $24.2 billion in terms of revenue. Diluted earnings, $367 to $411, but they beat on earnings and they come in right in line on revenue. And Macy's shares trading higher, as we said this morning, up about 9.6%, catching a bid on the open. As we got growth stocks trading lower right now, NASDAQ down 0.8%. We got crude right now up about 24 pennies. Gold, we got a strong dollar this morning. That putting a little bit of a hurt. Let's see how the dollar's trading right now. Yeah, backs off a bit, but we're still above 105 right now. And the 10-year, sitting basically at about 4.07%. Pretty wild. You can get more than 4% guaranteed on your money over 10 years, folks. You compound that money. It's a competition for equities. And equities haven't had competition in a long time, man. I mean, just so you start doing it over like 3, 4, 5 years, right? So the 5-year right now is at 4 1/3%, 4.33. Even the 2 years at 5%. It's the easiest number that you can do. It's pretty wild when you look at, in 2 years, the S&P has to be above 4,400. And I'm just talking about ballpark if it's at 4,000, which it was on Tuesday. The S&P has to be above 4,000. Above 4,400 in 2 years just to equal the risk-free rate of return right now for parking your money in a treasury. That's some competition, man, to say the least, especially when we have the volatility we have going on in 3 or 6 months. Now, listen, there is going to be a day, folks, when inflation has come down, the markets are getting hurt, we finally see light at the end of the tunnel, which we don't see yet, man. I think Chairman Powell probably regrets those words that the disinflationary process has begun. I mean, that's a hopeful statement that I don't think was in that data. If that was in that data, if the disinflation process had begun, maybe they would have been confident stopping their hikes, but that wasn't the case, right? I'm not so sure that was the case. If they were so sure, man, once the process begins, you're not supposed to let up. And that's the real worry there in terms of, has it really begun? Maybe you make a case it's begun, but is it supposed to get sticky? I don't think it's supposed to get sticky, right? We will see. All right, let's see what else I had pulled up here. We had a lot of articles to talk about. Yeah, Tesla. A lot of news last night. A lot of equities with action. So Tesla had their Investor Day down 6.7%. Pretty underwhelming was the general consensus there for Tesla. Yeah, falls short on specifics. Master Plan Part 3 for the company at its 2023 Investor Day in Austin, Texas. And there was not a lot to talk about. And that is in stark contrast to like Investor Day number 2 I was reading about last night. So some of the things they said in here first, their goal is to produce 20 million electric vehicles per year by 2030. Okay, the company had about 1.3 million in 2020. So that's quite a ramp up. Now, their last Investor Day in like 2017, I think, or 18 or something like that, they promised like everything. Man, so they diverted in quite a large fashion in terms of Musk talking about self-driving cars and human bots and all that stuff. Didn't really happen this go around. So not really the expectations of the market. Nothing really to get excited about over there. And so Best Buy, Tesla trades a little bit lower. Oh, we got to talk about this one. Okay. The bank that's into crypto is no longer into crypto and is probably not going to exist anymore. Silver Lake, what's that symbol? SI? Right? Let's take a look at this thing, man. There you go, and it's dropping. Yeah, when I was reading the article this morning, it was down like 30%. I said, man, I don't know. I think it might drop more than that after reading this article talking about that they're not even sure they have a viable business, folks. You hear that? They're not even sure they have a viable business. And that's 50% off of where this thing has been. Yeah. Whew, crazy, right? Imagine this thing, buying a crypto bank at 162, you're down to 6. Yeah, buying it at 239, buying it at 180. This thing was trading at $15 in September of 2020. This thing was trading at $16 coming into COVID. Run up to 240. Now, this is a regulated bank, okay? It's a U.S. bank catering to the sector in terms of crypto. Silvergate Capital said Wednesday it needs more time to assess the extent of damage to its finances stemming from last year's crypto rout, including whether it can remain viable. We need more time to figure out whether we're going to exist as a business, people. You better hear that one, man. They're hearing it on the open. They're sending shares lower, rightfully so. I wouldn't want to be in this thing waiting to see if this is going to be something that is going to exist in the future, and I'm a shareholder. Now, they already reported a $1 billion loss for the fourth quarter, said that figure could climb higher. The company is still tallying the cost. How is this possible? Okay. They should have had those done. They should have taken it on the chin. This means they're probably in big trouble trying to figure out how to assuage investors and massage those numbers potentially. Now, they're a regulated bank, okay, so they can't play around in terms of fudging anything. The company is still tallying the cost of rapidly selling assets to repay advances from the Federal Home Loan Bank system. It may also need to mark down the value of some remaining holdings, okay? That could result in being less than well capitalized. That's one way to put being broke, right? Seriously. The company is evaluating the impact of these subsequent events have on its ability to continue as a going concern. So such an admission by a lender with a federally insured deposit. Now, those have limits, okay? Never think that something isn't going to go broke, folks. You know, you're thinking it's a U.S. bank. You're thinking it's regulated. Maybe you start running your deposits up to a certain degree and you put more than the FDIC insured amount in there. And guess what? They go broke and you're not insured for that money. I think it's $250,000, right? They have federally insured deposits of more than $11 billion in assets, right? For a time, they were an exciting deal on Wall Street, okay? But what ended up happening was they had a run on the bank. That's what happened. Excuse me. Let me get into the number. All right, we'll talk about this when we get back. And just talk about how this happened, because they were capitalized. It's not a Ponzi scheme, man. But the speed with which there was a run on their bank caused them to lose money selling their assets, and they're probably going to be in trouble. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets catching a little bit of a lift off the lows. We're at 39.42, still down about 30% in the S&Ps. You get the 30%, yes, in the S&Ps. NASDAQ 100 off about 60 points, 0.5%. Russell off about 0.7%. Back to Silvergate, they catch a small bid with the market down 40% for the day right now. And yeah, I would be careful. So getting back into a little bit of the numbers that they talked about here. Where am I? Here we are. So they revealed in January how it was stabilizing its balance sheet after selling billions in assets to pay depositors. By the end of last year, the firm held $4.3 billion in short-term federal home loan bank advances, a program originally set up under Herbert Hoover to bolster mortgage lending. The bank said Wednesday it sold more securities in January and February to pay off those advances, potentially exacerbating its losses. Now, all of the advances were at all times fully collateralized while they were outstanding. But once they're not outstanding and they sell them at losses, are they going to be not capitalized enough to exist as a business? Potentially possible. So I'd stay away from that one, to say the least, man. All right, I think that was it to jump around. I was looking at the CPI, man. Let's check around the dollar index as we wrap up the program right now. Dollar index just below 105. So here's the reason we're catching a little bit of a lift in the market. Pay attention to those currencies, man. We got the dollar at 104.93 right now. And we'll finish it up with what? We'll finish it up with our man, Larry Pesavento. Folks, in 6 days, our man, Larry Pesavento, is hosting a live trading webinar next Wednesday, 6 days from right now, March 8th. Check it out on the front page of TFNN.com. It's $295. You gain access to his newsletter immediately when you sign up. It's an outstanding webinar, folks. 5 hours, 9 a.m. till 2 p.m. That will be archived if you can't attend live. And we got quite a market going around right now. Hopefully we get a good day March 8th. We will see. But nonetheless, we got some volatility, man. S&P's down 17 points. Stay tuned, folks. We got our man Basil Chapman up next. Steve Rhodes at 11. Fast Market at 12. Our man Larry Pesavento at 1. Dave White at 2. My dad live today from 3 till 4. And I believe he's got an interview, a Gold CEO interview coming up on his program between 3 o'clock and 4 o'clock as well today. Stay tuned, folks. Basil's up next. Have a great one.